Welcome to part 4 in the Trading Bootcamp series. In this lesson, I'm going to look at a really important concept, okay? Trader's mindset, how to build that bulletproof mindset, okay? It's a really important concept that's sometimes overlooked, but in this lesson, I'm going to teach you exactly how to build a bulletproof mindset and the type of ways you need to think as a trader and the type of skills you need to learn. So let's get stuck in and look at what we're going to be learning in this lesson, okay? Now, the first thing, which is a really important concept that I don't see many people at all teaching, is understanding random distribution and probability. So I'm going to talk a little bit about statistics. We're going to get a little bit technical, but we're going to look at random distribution and probabilities and why it's so important for us to understand that as a trader. Next, we're going to look at risk versus reward. Okay, risk versus reward is everything. Okay, risk versus reward is life. Okay, everything in life is about, okay, what is the risk of this and what is the potential reward? Every decision we make in life is based on risk to reward. And this is going to drive all of your decision making as a trader. Okay, when you understand the probabilities, you can better understand your risk versus reward. So we're going to look at this. Then we're going to look at a trading edge. Okay, what is it, how to develop it, and how to execute it. And then we're going to look at some concepts that we need to basically wrap all of this together to help us build that bulletproof mindset. So let's get started. Now, the first thing I want to look at is get a little bit technical and understand random distribution and probabilities. Okay, now the first concept is the law of large numbers. Okay, now the law of large numbers is essentially result of performing the same experiment a large amount of times. Okay, and how that result of a large amount of times of an experiment is going to be very different compared to a very small sample section of experiments. Okay, now the coin flip is a really good example of this. Okay, we know, everybody knows a coin flip is 50-50. Okay, now that should mean that it should be heads, tails, but it doesn't work like this. Over just a couple of flips of a coin, it could be heads, tails, heads. Okay, even though it's 50-50, but if you only do it a small sample size, okay, you flip it a couple of times, it's not going to be 50-50, okay? It might be 90-10 in your results of only 5 or 10 flips. But if you flip the coin a large amount of times, the result will be 50-50, okay? You start flipping it 50, 100 times, even more, you're going to start to see those law of large numbers play out and understand how those probabilities work. So we need to understand that 50-50 does not mean one then the other. It does not mean heads then tails, and so on, okay? Random distribution will dictate what it's going to be, and probabilities and the law of large numbers is what we need to understand. Okay, we need to understand that an experiment or a trading strategy needs to play out a large amount of times for the true result to be there, right? So we go to the next one, and then we need to understand strike rate. Okay, so we just looked at random distribution and probabilities, and we looked at the coin flip example, and we know it's 50-50. But when it comes to trading, we need to understand what our strike rate is. What is our win rate? Okay, so essentially our strike rate or our win rate, it's the percentage of wins against the total number of trades taken. Okay, so this is quite important to understand what your win rate is, and I'll explain later how understanding your win rate can really help that bulletproof mindset. So to figure out your win rate, okay, essentially you take the total number of trades, you look at how many wins you had losses. Okay, so number of trades you win divided by the number of trades you take times 100 gives you your strike rate. Okay, so if you took 100 trades and you won 40 of them, meaning you lost 60, your strike rate is 40%, or your win rate is 40%. Okay, so it's really important as a trader to have an understanding of what is your strike rate. Okay, roughly, okay, approximately what is your strike rate? Obviously, this is going to fluctuate up and down, but over a large amount of trades, you need to be journaling your trades, gathering data and understanding approximately what your strike rate is, because you need to know this to help build your edge and develop your edge as a trader and have that confidence and that bulletproof mindset that you are going to be profitable. Right, now I want to look at a little bit of a probability chart, and this one's a little bit of a reality check, to be honest. Okay, so what we're actually looking at here is the probability of X amount of consecutive losses within 100 trade sequence. Okay, then we're going to look at our win rate or our strike rate here on the left. Okay, so we'll look at some different examples of win rate and strike rate. Then we're going to look at the probability of losing this many trades in a row. Okay, so obviously 1, 2, 3, so on, all the way up to 10. Okay, so we're looking at what is your win rate or strike rate on the left. Then we're going to look on here for the probability that you're going to lose X amount of trades within 100 trade sequence. Okay, so it might be a little bit confusing, but let's jump into the chart and we'll explain it. So let's just go very, very simply, okay, like our coin flip example, we're looking here at 50% strike rate, okay, 50% win rate. So over 100 trades, okay, so we're looking over 100 trades, the chance of you getting 4 wrong in a row at some point within that 100 trades is a 100% chance. Okay, you will get 4 wrong in a row. Okay, that is just statistics, that is probabilities. Okay, the chance of you getting 5 wrong in a row, 95% chance. Once again, almost certain that you will get 5 trades wrong if you have a 50% strike rate over 100 trade sequence. Okay, so this is just imagining the coin flip. We know it's 50-50 and so on. We can look at the numbers, even to get 7 wrong in a row. So even though it's a 50-50 chance, the chance of you getting 7 trades wrong in a row over 100 trade sequence is still 52% chance. Okay, so it's more than likely that you are going to get 7 trades wrong in a row if you take 100 trades, even if you have a 50% strike rate. Okay, so this is very important to understand, because if you know your strike rates approximately, say 50%, and you know these probabilities, okay, you start to lose 3-4 trades in a row. You don't start freaking out and think something's wrong, because you understand that this is guaranteed to happen. It will happen. Okay, it's probabilities. Okay, especially when we start looking at these lower strike rate strategies. Okay, and some people trade with lower strike rate strategies, but they try and get higher risk to reward, and we'll look at that soon. But you can see the mental impact that trading with a lower win rate strategy has. Okay, let's say you're trading with a 30% win rate strategy. There is 100% chance you're going to get 8 wrong in a row in a 100 trade sequence. Okay, are you mentally prepared to lose 8 trades in a row? Okay, it's going to happen if you trade 100 times. Okay, that's mentally very, very difficult to keep showing up again and again and keep pressing that button with confidence after you've lost 8 trades in a row. And that's the reality of trading a system with a 30% win rate. Okay, very few people can do it just because of how mentally difficult it is. Okay, so I suggest going for a higher win rate and a more conservative risk to reward, which we'll look at in a second. And we start looking, we get down here to these 60 or 70% win rates, which is an incredible strike rate. Okay, I think anywhere from 40 to 60 is very, very realistic as a trader. Okay, that is professional trading. You don't have to get every single trade right. But even, in this area of this 40 to 60% win rate, which is very, very good, you can see here the probabilities of getting, multiple trades wrong in a row is still very, very high. So this is a super important chart to basically come to terms with, come to peace with it, understand it, and why it's so important to have a good understanding of what your win rate and strike rate is, so you can start to look at this chart and understand what your probabilities are in these losing streaks. Now, we've looked at strike rate. Now it's time to look at risk versus reward, okay? Because this goes in hand with our strike rate when we start looking to build our trading edge, okay? So everything in trading is risk versus reward. Okay, essentially, how much am I willing to risk or put on the table for a potential reward? That's essentially what trading is. Okay, we're paying to find out if our trade idea is right. We have to put money in the market to be able to take money out of the market. Okay, now we manage our risk by only risking a small percent of our total trading account, okay, only 1 or 2%. And then obviously we grow that and compound that over time. But I just want to give you an example of how we don't necessarily need price to move further to make more money. Okay, in these 2 examples, price travels the exact same distance. Okay, price is moving the exact same difference, yet the risk to reward is completely different. Okay, it's double on our second example. And what that means is we're looking at our entry price. This is where we want to get into our market. This is where our stop loss would be. So if price comes down and hits our stop loss, we lose how much we risk. So let's say we risked $100 on this trade, meaning that if price hits our stop loss, we would lose that 100. Okay, but if price comes in, enters our trade and moves to our target, we would make $200. Okay, because this is a 1 to 2 risk to reward. Okay, we can see here that it's 1 to 2, meaning that our reward area is double the size of our risk area. Okay, we stack that, there'd be 2 of these up here. Okay, they're very uneven, but you get the picture, right? 1 to 2 risk to reward given how far price traveled. Now, same example, right? This is our entry. We risked $100, right? Once again, it's only a 1% risk. So if price comes down to hit our stop loss, we would lose $100. But because our invalidation or our risk is tighter the distance here is tighter. It means our position size is larger, even though we're only risking the same dollar amount, meaning that if price was to travel here, this is actually a 1 to 4 risk to reward, meaning we would make $400. So we can see in these two examples, price travels the exact same distance, yet we've made twice as much money here. Okay, 1 to 4 risk to reward, or 4R as we can call that. And this risk to reward is 1 to 2 or 2R. Okay, so this is a really important concept to understand, that we don't necessarily always need price to travel further. Sometimes we will be able to get in with a smaller invalidation, and this is going to be completely based on your entry trigger and the technical price action you're seeing, because our stop loss does not just go in any position based on money. Okay, our stop loss goes in a technical position. Our stop loss must go at the location where our trade idea is wrong, meaning that if price comes down and hits our stop loss, our idea was wrong. Okay, whatever our idea for this trade was wrong. That is where our stop loss wants to go. We do not want to just put it somewhere that gives us a nice tight dollar figure, because you're just going to get your stop loss taken out and price is going to hit your target over and over again. And this happens to loads of traders. Okay, stop loss must go where the trade idea is wrong. Okay, now it's time to look at trader's edge. Okay, we've looked at win rate and we've looked at risk to reward. Now we need to understand, what is a trader's edge, okay? And why do we need to learn our win rate, and why do we need to learn our risk to reward to be able to work out our trader's edge? Okay, so what this chart is showing us is if you're going to be profitable or not based on what your win rate is and based on what your average risk to reward is, okay? Because obviously every trade, you're going to have a different risk to reward. You're not always going to have an exactly 1 to 2 unless you have a completely mechanical strategy, which means I think you're going to leave a lot of profits on the table. But this is average, okay? So maybe over an average of trades, some are 1 to 2, some are 1 to 4, and your average might be 1 to 3, meaning when you risk $100, your average return is $300, okay? So you can obviously get this data, by journaling, testing trades, and just working out the average size of your winner. And obviously you want to keep that average losing side exactly the same. You want your loser to be consistent. Now, win rate. Once again, this is going to be a fluctuating number, but you can work out approximately your strike rate or win rate based on a large sample size of trades. Okay, that's probably a little bit confusing, so let's just jump into the chart and look at it, right? We'll go back to our example of our 50% win rate, okay? So 50% win rate, you only need your average winner to be 1 to 2 risk to reward to be profitable, okay? This means that if you've got a 50% strike rate, and your average run is 1 to 2, which is extremely realistic, half your trades you can get wrong, and you only need to double your money on trades, you are going to be profitable in the long run. Whereas if you had a 40% win rate and you were just doing 1 to 2s, you would be slightly negative. Okay, over a large amount of trades, you'd be slightly negative, right? So obviously we want to be finding a system or an edge that gets us into this green area, okay? So you can see here that you can actually have a lower strike rate, 30%, but it means that your average winner needs to be massive. Okay, it needs to be 5 times, right? So I think the sweet spot is really, this 50, 60% win rate, and you're sort of in this sweet spot here. To me, this is really good trading. Win rate around 50, 60%, and your risk to reward around 1 to 3, 1 to 4. Okay, I think this is a comfortable, very realistic spot if you use all the things I'm going to teach you here, right? So win rate and risk to reward can give you your edge, okay? And we can also see some break evens here. You got a 60% win rate, but you're only hitting 1-to-1s. You're going to be just breaking even, meaning you're not going to be going forward, but you're not going to be going backwards either. We want to be getting into this green area. Like I said, I reckon, this 50 to 60% win rate, 1 to 3, 1 to 4 is a fantastic place where you want to be getting your trading and getting your edge. All right, now it's time to look at everything we've learned, wrap it up, and look at a bulletproof trader's mindset and the type of thought patterns we need to have as traders to make sure we're successful. But before we get into that, if you're enjoying the content and you want to dive even deeper, check out the link below for the Ronin Trading Academy. Okay, it's a full one-stop shop trading academy. It's an online course with over 25 video lessons. It comes with a private Discord community. You can ask questions anytime, including all my market analysis, trades I'm taking, everything I'm seeing in the market, as well as a bunch of advanced ongoing lessons with things like order flow concepts and advanced trade entry. So if you're enjoying that, check out the link below, Ronin Trading Academy, discount link down there for you. But let's get back into this lesson, right? Bulletproof trader's mindset. Now, one of the biggest concepts we need to understand is we're thinking in percentages, not as dollars. Because when we start thinking in percentages, we can really scale that. Okay. If we think in dollars, we're really limiting ourselves. So you need to be a really probabilistic thinker, thinking percentages, thinking strike rate, thinking in your percentage wins. Don't think of, a $200, $300 win. It's a 2 or 3% win. Thinking in percentages, not in dollars, very, very important. Okay. We know we need to develop and execute an edge. Okay. And our edge comes from our win rate and our average win size. Okay. So develop and execute an edge. Right. We know after looking at the charts how important it is to understand random distribution and probabilities. Okay. Now, to understand all of these things, you need to journal. Okay. You need to gather date. That should be data. Let me just fix that up for you. Journal and gather data to know your odds. Okay, there's no good guessing and going, oh, I think I might be a 40 or 50% win rate trader. Okay, gather your data. Data is powerful because if you have the data to back up the fact that you are a 50% win rate trader, when you go through a drawdown and you lose 4 or 5 in a row, you can remain confident because you have that data in your journal, knowing that you are a consistent trader. And like I said many, many times throughout these courses, consistency is key. All right. Now, this is a very, very powerful frame of mind. It's a very simple frame of mind, but it's extremely powerful frame of mind when it comes to trading mindset. Okay. The way you need to think is the result of each individual trade is random. You don't know what's going to happen. So when you enter a trade, you need to be completely comfortable with the fact that the result is random. But over a large series of trades, you need to be 100% confident that you will be profitable. Okay. Individual trade, emotionally detached from the random outcome, but over a large sample size of trades, you need to be 100% confident you will be profitable. All right. Any questions, drop in the comment section below, and I'll see you in the next video.